Right. And like I said, we'll just do a quick review. We are learning about what managers do, since those are the folks we're learning to make reports for, right? We talked about the difference between financial and managerial accounting. I don't know why this is doing this. It's being persnickety. That's a word I don't get to use that often. Okay. So we talked about what managers do, right? Alexandra, make sure you put your name on the list. And so we need to create reports to help them do their jobs, which helps promote the vision, the mission, the strategy of the organization, right? And so these are the things managers do. They plan for the future, they control the current performance, and then they look back at the prior performance to evaluate how things went. We went through a couple different examples, but then we got to financial versus managerial accounting, right? Let's just do a quick review here. What are some differences? Okay, which reports you make? We know there are 5 financial statements we learned in financial accounting, and there are lots of different reports we'll learn to make in this class. Okay, good. What else? Okay. Exactly. So financial statements are made quarterly, annually, typically, and managerial reports are whenever needed. Brian.
Who sees them and where they go?
Okay, exactly. Financials for people outside the organization primarily, managerials for the managers. What else? How about GAAP? GAAP applies to financial, okay? Auditing, that's right. Do managerial reports need to be audited? No, but we know that financial statements do. Okay, so you get it. We looked at this example of how data might be assembled to help managers make decisions about product pricing. That was another scenario. We looked at a pretty standard sort of org chart that showed you where finance fits in under the treasurer and accounting under the controller, and they're both under the chief financial officer. When we get to the problem set, we'll see an org chart like that one. Talked about different jobs and what they pay. We talked about certification, different types of certification. I think that was the last slide we had covered. Yeah? Okay, perfect. All right, so we will pick it up here. There is an Institute of Management Accountants, IMA. They are the ones that create the exam that you would take if you wanted to become a certified management accountant. So if this is the field that you decide to go into, I would recommend becoming a member of the IMA. They do have a statement of ethical professional practice, but again, the reports are for internal use, right? So it's not as critical as it is with financial accounting, where you've got outside people that you need to make sure you're not defrauding. But there are still ethical practices related to managerial accounting. And I talked about Cal CPA, how they have free memberships for students. So that's another organization that you might join, regardless of what area of accounting you might be interested in going into. Cal CPA would be a good thing to be a member of, especially since it's free. And I told you about that scholarship opportunity that comes around in the fall. All right, questions or comments? Please make sure you put your name on the list there. Right? Any questions, any comments? Okay. Sarbanes-Oxley, I think you learned about that in Intro to Business, in financial accounting, and we're going to talk about it again. Who can tell me what is Sarbanes-Oxley and why is it important? Emma.
It came up after the scandal with,
Enron,
yeah,
WorldCom.
Enron. So they made a lot more requirements to be.
Yep, exactly right. So back in 2000, 2001, there was the dot-com bubble that burst. All the tech companies, I probably talked about this a little bit already, we're having a hard time getting investors because investors didn't want to invest in these not profitable tech companies anymore. And when that happens, when you have a stock market bubble burst, a lot of the folks that were making a lot of money all of a sudden get exposed if they didn't have a real solid business model. This would include companies like Enron and WorldCom, and then there were plenty of others. So what happened with Enron, it was an energy trading company. They didn't really make anything. They just traded energy, but they were cheating. They were lying about how profitable they were. And so their stock price was really high because investors thought the company was really profitable. When it became clear, when somebody blew the whistle and it became clear that they were lying about their profits, investors pulled their money out and the stock tanked. Same thing with WorldCom. That was a big telecommunications company and they were growing like crazy. But again, it was because they were lying in their financial statements about how profitable they were. And when they got exposed by a whistleblower, again, the investors pulled their money out. So usually when markets are good, companies can make a profit. If they're smart, they can find a way to make a profit and their company grows. But if companies are cheating, eventually they will get exposed. And if the market itself is struggling and the market goes down, you have things like the Bernie Madoff scandal. How many people are already familiar with Bernie Madoff? Probably have heard his name. So he had a $65 billion fraud that he committed over the period of about 20 years. He had been at one point, he was the chair of the NASDAQ stock exchange. He was a smart guy. He was reputable. He was well connected, but he was also greedy apparently. And he started this fraud on the side to get even richer and got away with it for a long time until the stock market crashed and the investors started coming to him and saying, hey, we know you're making all this money for us and you're investing our money, but we need our money back right now because the stock market's doing so bad. And when they came to him and they said they wanted their money, guess what? He didn't have it because again, it was all a scam. A $65 billion scam. And he ended up going to jail. And it's a really tragic story. A lot of people lost money. So that's what happened when the dot-com bubble burst. Enron collapsed, WorldCom collapsed, a bunch of other companies, Tyco was another one. There are all these scandals. And so Congress, their job is to make laws. Two senators from Congress got together and came up with this bill. Their names were Senator Sarbanes and Senator Oxley, hence the name of the act that got passed. So they presented this bill, and we'll look at it in more detail later, but basically what it says is that every publicly traded corporation has to have an internal control system that gets audited every year to make sure there's no fraud, there's no scandal. Well, there's no financial scandal with the company. You have to audit not only your books, but you have to audit your internal control system to make sure nobody's cheating, nobody's cooking the books. And the chief executive officer and the chief financial officer of the corporation have to sign off on the financial statements to verify that they're true. Because what happened with Enron was the CEO and the CFO tried to say, we didn't know that there was fraud. We just trusted our accounting department to tell us how profitable we were. So blame them, don't blame us. And this law, the Sarbanes-Oxley law, says, no, you can't do that. The CEO and CFO have to sign off on the financial statements and be held liable. In fact, when the Enron case went to the courts, that's what I was trying to say. When the Enron case went to the courts, the judge did find Enron liable, and the CEO and CFO both got sentenced to jail. And the CFO served time in jail. Jeffrey Skilling was his name. The CEO happened to die before his jail sentence, so he actually never served time. But that was one of the purposes of Sarbanes-Oxley, so that the executives can't weasel out of responsibility for corporate fraud. There are also fees and fines that are included if there is any kind of fraud, and whistleblowers are protected under the Sarbanes-Oxley Act. So it was designed to prevent another Enron or another WorldCom. By the way, let me tell you a little bit about what Enron was doing. This is the company I said was an energy trading company, right? So they basically were buying and selling energy. And a lot of you probably don't even remember this, but around that time, energy prices in California were going up really quickly. And that was because of Enron. They were gouging California's energy prices. And people were so mad about it in California, they threw out the governor, Gray Davis, who, as far as I know, he had nothing to do with it. But anyways, they threw out Gray Davis and ended up getting Arnold Schwarzenegger as a result. All right, so what did I want to tell you? Oh, yes, what Enron was doing that was so fraudulent. So you're supposed to follow GAAP in financial accounting, right? Generally accepted accounting principles, right? And what Enron was doing to make itself look more profitable, they set up these other companies in island nations, like I don't know which, but there are all these offshore tax shelters where companies like to say that they have business and they really don't. They just have an address there, but they do that so they can get out of paying taxes. They set up all these offshore companies, but they were saying that these companies were buying from Enron when they really weren't. And the only reason they did that is to show more revenue, which really didn't exist. And it was hard for anybody to know because these are international transactions, and how do you even know? But again, somebody within the company, one of the people in the accounting area, blew the whistle. And once it got out that Enron was not really as profitable as it had said, the investors started to sell their stock. The executives knew what was coming. They started to sell their stock so that they could cash out as much money as they could. But the employees were not able to sell their stock. Some of the employees had purchased company stock through their retirement plans. They had bought Enron stock in their retirement plans. The executives froze their ability to sell that stock. So they just saw the value just go down. They couldn't sell it. That's how slimy some of those executives were. So anyways, that was the Enron situation. There are movies about it, there are books, so it's a classic case. And Sarbanes-Oxley was an attempt to prevent those kinds of scandals and frauds from happening again. That was 2002, right after the dot-com bubble burst. Only 6 years later, we had even worse scandals and frauds and economic meltdown when we had the 2008 financial crisis. So in that period of 6 years from Sarbanes-Oxley to the financial crash of 2008, we thought we had fixed some of these problems with Sarbanes-Oxley, but obviously there were still problems because we had, again, more fraud and corruption. 2008 was a nightmare. I don't know if anybody remembers that period of time, but the stock markets crashed. A lot of people were out of work. A lot of investors lost a lot of money. And then there was more legislation. I don't think this is covered in the textbook, but can anyone tell me what was the next law that was passed to try to clean up corporate finance? It was called the Dodd-Frank Act, and that came from two senators, Dodd and Frank. I'm sure that's also helped. But the thing is, scammers are always going to scam, right? There's always going to be fraud out there. There's always going to be people trying to cheat the system. So my guess is next time, and by the way, our stock market just hit record highs again. We are in territory the stock market has never seen before. So the next time the stock market takes a big plunge, I think there are going to be a lot of other scandals and frauds that get revealed. Because when everybody starts to get scared and starts pointing fingers, that's when a lot of the whistleblowers come out and everything gets exposed. All right, so that's a little bit about Sarbanes-Oxley. Questions or comments are out there?
I was thinking the next level, odds and ready.
Ooh, okay. Well, so one reason that the stock market is so high, and I think it's a major reason, is that companies, when they have enough money, they can buy back their own stock. And in under the Trump administration, when the corporate tax rate got cut, so the tax rate went down pretty significantly for corporations, that meant they didn't have to pay as much tax on their income, which meant they had more cash, which meant they could buy back their own stock and artificially push up their own stock price. That used to be illegal. And for some reason, it's now legal. And I think that's a big part of why the stock market is so high. I think we should go back to that being illegal, personally.
They already had on that free day had episodes on PG&E and Boeing of all the, like Boeing had two planes crashes for them instead of paying for the proper like planes, they were doing stock buybacks and had two plane crashes.
Yeah.
Where like everybody had.
That was right.
The only reason that it came out because in one of the plane crashes, there was one American.
Okay. So I didn't know the details on the Boeing situation, but that is a great illustration. So thank you for sharing it. Because yes, when these major tax cuts were given to the corporations and to the ultra wealthy, the argument was that these are the people that create jobs. They're going to use the extra cash that they have to create more jobs, better products and services. And maybe to some degree, some companies did that, but a lot of them didn't. They just took the money and bought back their own stock. So yeah, I think that should not be allowed. Yeah, instead, we should require corporations to make products that are not going to kill people, right? That makes sense to me. Other questions or comments? Okay, so we'll come back to Sarbanes-Oxley a little later. Some trends. When we start talking about trends, you know we're near the end of the chapter. Some trends related to managerial accounting and accounting in general. So a lot of companies are implementing these ERP systems. Hopefully you learned about that in your intro to business class as well. Somebody tell me what's an ERP system? Right? Enterprise Resource Planning. Yeah, that's what it stands for. What is it? Anybody? So it's when a company has one database and basically one software program for the entire company, instead of having lots and lots of separate software programs. Like, you know how here we've got Pause, we've got Canvas, we've got what are some other things? Job Seekers one. We've got all of these different websites. Most of them we can access through Duo, but they're all different programs. And the information between them doesn't always transfer, right? Because we don't have an ERP system. I'm sure eventually we will, and it's not just us. I don't know that. Well, I'm sure that most of the community colleges in California also do not have ERP systems. They are difficult to implement because can you imagine trying to have one program that serves everybody's needs in an organization? Even if you go to a company that makes these programs and say, hey, we want one of your ERP systems, they'll say, great. It's going to take a year or two because we're going to have to meet with you, find out exactly what the system needs to do. We're going to need to train all the users. We're going to need to make sure you have all the hardware. So it's a very long process to implement one, and they're very expensive. But if you are a growing company, at some point, you need it. If you want to be efficient and competitive, you're going to need an ERP system. And accounting is one part of it because we use software for that, right? So there's an accounting component in the ERP system.
Firewalls, because I know like in banking, they have separate systems
Mhm.
because certain
Oh,
departments are not allowed to know the information. from
Yeah,
the
that-
departments.
yes, that can be built into the ERP. So people only have access to whatever data they're supposed to have access
Yeah,
to.
because that's the that was a huge thing, you weren't allowed.
Mhm.
You weren't allowed.
Right, exactly. You need to know basis for information. Right. Yeah. So that is a trend. A lot of companies, this is why it might be relevant. Let's say you get a job in accounting at some company and everything's going great. You got used to their systems and their programs. And then they say, oh, we're putting in this new ERP system. Guess what? You're going to have to relearn how to do your job. It's for the best, right? It'll be much more efficient, but it is a transition, right? Because you're now having to learn a new software program. But yeah, that's what an ERP system is. Automation is, I think I mentioned this on Tuesday, having major impacts. It's actually simplifying accounting because you don't have to do data entry, right? Think about when you go to the grocery store and you pick up an item off the shelf and you go to checkout. The point of sale system or POS system, in other words, where the cash register is, it scans the item, so it knows what you purchased, and it can update the inventory automatically. It knows the price of what you purchased, because that's already programmed into the computer. It knows how much tax to charge you. It can accept your credit or debit card payment, maybe even cash. It's all automated, and you don't have to have people writing down every sale and then entering it into a computer, right? It's all automated. So that's a big impact on accounting. And it takes away a lot of the boring part of accounting and lets accountants handle the more creative and problem-solving aspects of accounting. Outsourcing is a trend that's been going on for decades. I remember, my goodness, this must have been 2008 or 9. So what's that, like 15 years ago? Reading a book that was talking about how even at that time, even 15 years ago, some companies that prepare taxes for Americans were outsourcing the tax preparation work to India. So you might go into a company to have your taxes done. You give them your social security number and your pay stubs and all that stuff. And they would send the data over to India where you've got highly trained people that know the tax code in the United States, and they're there doing the data entry and everything. And then the data comes back and you've got your processed tax return. So that was some international outsourcing of accounting information 15 years ago. No, US. Yeah, they'd be following US laws and standards. So imagine today how easy it is to just send information around the world, have it processed and come back. There can also be domestic outsourcing. It can happen within the US. Anytime a company hires another company to do something on its behalf, that's really outsourcing. So there's a lot of that going on. Some companies might outsource their entire accounting. They just realize they don't want to do it, and they hire a company to handle all of their accounting or their payroll. So did I tell anybody in this class about the billionaire I met last year? He became a billionaire because he started a software company that makes software for processing payroll and other human resources types of things. And it's a huge company now.
Wasn't that the guy who wants to?
No, he did. I met him at a conference, and then he did a Zoom call with my students last year. If anybody wants, I can share the recording. It was a pretty cool conversation. But yeah, that's what his company does. They provide solutions, both outsourcing and software for HR and payroll. So these are some of the trends impacting the world of accounting. What questions are out there? None? Okay. Here's an example of what an ERP system encompasses. Basically every aspect, everything. There's project management software, manufacturing, HR, customer service, both finance and accounting, inventory, sales, and e-commerce and distribution. All of that in one huge package. All the data stored in one database that hopefully is backed up. I'm sure it's backed up. So that's how ERP systems work. Other trends. There's something called lean production. You might have learned about this in Intro to Business as well. Who can tell me what lean is? Lean production, lean manufacturing. Anybody? Lean? No? Okay. Lean is an approach. It's part of the whole total quality management approach to improving operations and companies. But lean specifically came from Toyota. It was the system that they developed to manage the quality of their operations. And they call it lean now because the idea is you get rid of waste in the organization and you make it more lean. So you look for areas where you're wasting time, wasting money, wasting energy or resources, and find ways. You have teams of people that find ways together to reduce waste and make the organization more lean. There is actually a type of accounting called lean accounting to go along with lean manufacturing. We don't get into that in this course, but it does exist. We will get into this topic. It's around chapter 12 or 13. We'll talk about the balanced scorecard. Anybody familiar with that? This is an approach some companies are using to evaluate their own performance. Obviously, you can look at your financial statements to see how you're performing financially, right? But some executives are saying, we want to look beyond just financial performance. And there are three other areas that they look at if they're using the balanced scorecard. They look at what is the customer experience. They look at how are our internal operations functioning? Are we lean? Are we operating efficiently? And are we learning and growing as an organization? And they look at finances. So those are the four areas. And when you do that, that's called the balanced scorecard because you're not looking at just one aspect. It's a more balanced view of the organization. Now, accounting could be involved with preparing those reports. So you might find yourself, if you go into accounting, that beyond just doing financial reporting, you're putting together reports about how the company is learning and growing, which is not financial in nature, right? Or about the internal processes or the customer experience. Another trend is globalization, which has been here for decades, is continuing. So more and more companies are importing and exporting, expanding into other countries. That, although once in a while we see a little bit of a step backwards, not in a negative way, but for example, we've recently started to make more computer chips in this country instead of relying on Taiwan and China to provide them to us. Right, so sometimes the trend shifts back the other direction, but in general, I think we are still seeing more and more global trade around the world. So that trend will probably continue, which means for accountants, that's a lot of opportunity in international business. Did I mention the international tax manager from Driscoll's that I heard give a talk? People are getting more and more concerned with social responsibility, looking at things like, is our organization treating people fairly, or is it discriminating? Are we using slave labor? You know, it sounds terrible, but it is terrible, but it actually happens. You know, there are people around the world, even in the United States, working in sweatshop conditions, which of course is illegal. Yeah, well, yeah, okay, so Dollar Tree would not be slave labor, but it might be close to it, right? Because they're there by choice. Yeah, yeah. So there are a lot of companies that are profiting off the backs of their workers, right? I mean, not just underpaying them, but taking advantage of them. But there are some people that are actually forced to work even in this country, right? Which is a shame. So is the company being socially responsible in how it treats its customers, its employees, and its other stakeholders? And is it being sustainable where it's not polluting any more than it has to? It's not destroying the planet. You know, it's not emitting greenhouse gases unnecessarily. These are all major concerns. And accounting sometimes puts together social responsibility reports and sustainability reports. Okay? So again, it's not always just about dollars and cents. Questions or comments? Okay. I mentioned total quality management, which is where lean manufacturing came from. Kaizen is a term that also comes from total quality management. It's a Japanese term. Anybody know what Kaizen means? Yeah. What's that? Yeah. Yeah, it means continuous improvement. So making things better, but continually making things better. And that is the overall total quality management like mantra. That's what it's all about. How do you look at your organization, make it improve continuously so that your costs hopefully keep coming down, your revenues keep going up, quality of your product goes up, your employees are happier, your customers are happier. So you might hear that term Kaizen come up in the business world and in this class, but that's what it means, continuous improvement. All right, here is a hypothetical we can go through. It's an aerospace manufacturing company. They've been steadily growing, and they came up with an advanced technique for high-speed machining. I don't know a whole lot about machining. I really don't know anything about machining, but it doesn't matter. There are some different managers in the company. We've got 5 different managers, and we're going to take one at a time. We're going to look at what this manager does, and we're going to think about what information they would need to do their job better. So starting with Alex Friedman here, who supervises the computer programs. If you supervise computer programs in a company, what information would you need to be able to do your job? Okay. What kind of programs are you using? What else? Just brainstorm.
Network.
Okay. Information about the network, computer network. What else? Feedback. What was that?
Like glitches or problems with
Glitches or problems?
costs.
Costs. Okay, exactly, right? And where do you get this information? Some of it's going to come from accounting. How about Emma here? Not you, Emma. Different. Oh no, wait, Ella, Emma. Okay. Not you, Emma. So this sales manager supervises the sales agents. What kind of information would she need to do her job? How many sales agents are there? What else?
Their strengths and weaknesses.
Their strengths and weaknesses. Thank you, Ella. What else? Okay, the job requirements. About how much they're selling, right? Okay, how about Kayla here? She is a cost accounting director. So she oversees the accountants that keep track of costs. What information does she need? How many cost accountants are there? Okay. Their job descriptions. What else? Okay. So how much the company is spending, because that's what they're tracking is costs, right? But also how much are we spending on these workers? Because we have to pay them, right? They each have a certain salary. All right, anything else? These are good points. Mwangi oversees new product testing and design. So what information would be needed for product testing and design? Is that feedback? Okay. Are the products working? What else? Do people like the designs, right? You can do some market tests.
How many products are they developing?
How many products are we developing? What products are we developing?
For the cost.
The cost, yeah, of course. Excellent. Okay. And last one here, Torek supervises the manufacturing employees. So what information does the production director need? Labor costs, close out. Oh, I didn't hear. Who said what?
Speaking it, that's why.
Oh, way over there. Okay. I heard a voice over here, I thought. Okay, I guess I'm imagining things. Okay, so where are we? Production director, what else do they need? What information? Performance? Okay. How many workers are there? Efficiency. How much are we actually producing?
You need to know about returns on this.
Returns, yeah, like the defects and return products. How much are we supposed to produce,
If
right?
there's waste, how much waste?
How much waste, right? Excellent. So you all have done a great job of identifying types of information that are useful for managers. And you see that there's some similarities, right? They overlap, but there are definitely differences depending on what it is that's being managed. Some of them are financial, right? But some of the information you pointed out is not financial. Okay. Another hypothetical. So in this one, it's a dairy. We are a market analyst. We need to evaluate the various, I don't know what that says.
Sales.
Various something. Standard? Okay, various standard and specialty ice creams. Okay. So we've got like regular ice creams and then special ice cream. So we need to evaluate them in one particular region and other regions. Okay. Are some selling better at certain times of the year? And we're trying to increase sales so that we're selling in 10% more stores than we currently sell in. So where would we get information to help us evaluate our current ice cream sales and figure out how to increase and sell in 10% more stores? Where would we go to get information on that? Okay, to find out how much the stores are selling. We could ask customers their opinions about the product or where they buy.
You could see market trends for other businesses,
Okay,
like the bigger, small businesses.
Okay. so we might be able to get market data on our competitors or similar companies and what they're doing. So what type of information would we really be looking for in order to figure out how to sell in more stores? Sales information? Okay. So how much are we currently selling? In what stores? What flavors are popular in what areas? What are our prices compared to our competitors' prices, right? So that's the sort of stuff. Okay, and let's say that we come up with an idea and we say, okay, we know how to increase our number of stores we sell in by 10%. So we develop this plan, we implement this plan. Remember, management is planning and then controlling, but then evaluating. So once we've implemented our plan, how do we evaluate if it was successful? And sales, customer feedback, how many stores are actually stocking our ice cream, right? All right, so you're thinking like managers. This is great. All right, this is our summary slide. This is where we get to review what we learned in this chapter. So we know that managerial accounting prepare reports for managers so they can do their jobs better, right? And it includes non-financial information as well as financial information. We talked about the differences between managerial and financial accounting. So I think you all have a good handle on that. And we know management accountants work with people throughout the organization to get the data that they need. Sometimes you're talking to, an entry-level employee on the shop floor, where you walk over there and say, hey, how much inventory do we have today? Or sometimes you need to go talk to a manager. Or maybe sometimes you have to go talk to the CEO to give them a report. So as a managerial accountant, you might find you're dealing with people at every level and within every department in the organization. We also looked at what are some of the skills for managerial workers. I don't know if it's on here. Oh, it is. Okay. We talked about the Institute for Managerial Accounting or Management Accountants and how they have ethical standards, even though the information's all for within the company, there are still ethical standards. We looked at different trends in technology like ERP systems and automation, lean management and manufacturing, the balanced scorecard where you take a more holistic view of the company, the impacts of globalization, social responsibility, and sustainability. Okay. And these are many of the topics that we'll get into more detail on throughout the semester. Okay. So we've gotten through chapter 1. I think I mentioned it is a light chapter, so that's nice. That means it gives us time to go through our exercise set and problem set for chapter 1 today. Those are also on the light side, so we'll start the course off nice and easy, but it'll ramp up next week. So I'm going to stop recording. What's that?
Oh,
Yeah. No, that's the fun part. Okay, I'm going to stop this recording now.